You say for a breakout after one candle close, you can enter. But on what time frame candle should it be? Is the 1 minute candle enough? Because sometimes it closes above the swing high and then closes back below after a few candles and reverses. Okay, two parts of this question that I want to address. What time frame candle should it be? It is whatever time frame you are currently executing trades on. So on me, that would be the 1 minute time frame, which means if I have a resistance level and I get a green candle above the resistance, which closes above the resistance level, then this is my entry trigger and I'm good to go. I can enter the trade. So the 1 minute is fine. Yes. Okay, second part of the question. Because sometimes it closes above the swing high and then it closes below after a few candles and it reverses. Okay, so this is important. When you get a candle close above resistance, some of the time it is going to pump. Other times it's going to dump, right? Either it's going to go up from there or it's going to go down from there. In fact, it doesn't even matter what rule I use for the entry, whether it's one candle, whether it's two candle closes above resistance, like so, whether it's three candle closes, whether I switch the time frame out for something else. If I change the rule entirely, if I say it's not one candle close above resistance, but it's one candle close above a moving average. If I say, let's ignore price entirely. In fact, I only want to focus on the crossovers of two moving averages. What if I ignore price-based indicators entirely and I say I'm only going to enter the trade if the volume was increasing for 20 consecutive candles? Then and only then am I going to consider entering the trade. It doesn't matter what you use to enter the trade, because sometimes it's going to work, sometimes it's going to fail. In fact, the sometimes part is a given and it is inevitable, because at all times, X% of the time, it's going to break out. 1 minus X% of the time, it's going to fail. What's really important though is, how do we define X? What is X, right? Sometimes it's very vague. We want to get closer to the truth. We want to be really clear with what is it that we're actually observing, right? So if, for example, let's pretend that, I'll use a different color. Let's pretend that X is 70, right? So imagine that 70%, when it does this, 70% of the time it breaks out, 30% of the time it fails. Cool. If you're running a 1R strategy with a 70% win rate, every time that this happens, who cares if it fails 30% of the time? You've got edge here. You've got really good edge here. This like, you're sitting on a money printer. Who cares if it fails 30% of the time? Like, there's so much edge here. So like what really matters is what is the actual probability of this moving to the upside? Sometimes isn't good enough. We want to attach a number to this. And remember, if you're running a 1R strategy, you don't actually need this number to be that high. So to break even, if you're going for 1% moves, let's say every single one of your trades is a 1%. Like if you win, you're capturing 1% upside in price, and if you lose, you're losing 1% downside. In reality, this is not how it's going to be, because altcoin perpetuals are usually a lot more volatile, and you'll be catching moves most of the time larger than this. But let's just pretend, just for example's sake, that every single move that you're going for is only strictly 1%. After fees, to break even on fees, X has to be at least 52.5%. That means that if you have that means if X is 55%, that means you have an edge and you have something that makes money over time, right? Because at 52.5, you're going to be break even. At 55, you're going to be making money. At 57.5, you're going to be making pretty nice money. Like, that's a nice edge. And at 60%, this is like really, really good, like really good edge. So like how big this number actually has to be doesn't have to be, it doesn't have to be like 90 or like 95 or 80. It doesn't have to be some huge number. Even something small like this is like, that's a big deal. Like, that's a really big deal. So that's the first thing. Try to actually attach a number to this. So then your next question is, okay, well, if I was to just blindly get long at resistance every single time that I get a candle close through it, what is the likelihood that I win? And what you'll find is that the answer to that question, it's very close. It's very, very, very close to 50%. So therefore, after fees, it's actually edgeless, as in there is no edge if you were to just blindly do this all the time on altcoin perpetuals. Okay, so this would not be fun if you were to do it. So the next question is, okay, well, what are the factors that could maybe increase X in our favor? Well, if we have 2 hours of, at least 2 hours of slow grindy staircase, this will make X go up, right? So if you compare the results of every single time that you were to do this, just like in general, like all the time that there was a candle close through a level, you might get a certain win rate. But if you were to get more strict with the definition and say, I'm only going to take it if there is a candle close above a level and there was at least 2 hours of staircase, you're going to notice that there is a little bit of a bump up in X. If the volume was also simultaneously increasing for the past 2 hours or throughout this staircasing regime, again, you're going to notice a little bit of a bump up to X. If the most recent 10 minutes of, this is supposed to be an M, by the way, if the most recent 10 minutes of price action, if we were to zoom in on this, and it looks much like a clean grind rather than a fast vertical type of spike, again, this is something that helps boost X in our favor. These are the, like, based on a lot, I would say, well in the thousands. So based on thousands of trade screenshots that I have reviewed, I could even argue maybe tens of thousands. Would I say tens of thousands? Okay, I'm not going to be too ambitious. I'll just say singular thousands. Single thousand trade screenshots that I have reviewed. The 3 things that I have actual data on to show that this has impacted the likelihood that something breaks, it would be, is there a staircasing type of price action on the left-hand side? Is there the absence of a fast spike, which means that the most recent 10 minutes of price action did not have a huge giant green candle coming into the level that you're entering a trade? And how did the volume look like? So was there increasing volume on the left-hand side? When all 3 of these are true, X happens to go up. So awesome. Now, hopefully, as more time goes on and I do more research and I do more data reviews and I have more conversations with people who are slightly worse, roughly similar, and even better than me in level of skill, hopefully, I should be able to get more insights and more learning lessons on what other things actually impact X. Because remember, like, again, before I wrap this up, remember, it doesn't matter what thing that you're tracking or what method you're using to enter or exit a trade, there's always going to be a likelihood that it fails. It's inevitable. This number will never equal 0. this number will never equal 100, right? It's between 0 and 100. And our goal as traders is to investigate, do a whole bunch of research, experiment, collect data, and review the data to see what are the variables which move this number closer to 100 and further away from 0. Okay, I'm going to wrap up the video there. Hopefully that was helpful.